Welcome to the Prudent Pulse. We're covering the week of March 31st to April 4th. Now, with just 2 days until President Trump's Liberation Day, details still remain scant on what tariffs could be implemented on April 2nd. Now, initially, the idea was that America would apply reciprocal tariffs to match tariffs from all foreign countries on sales of U.S. goods abroad. Then it was suggested that reciprocation would be just focused on the dirty 15, i.e., the 15% of countries that the administration considers its worst trading partners. Now there's consideration to apply a flat tariff as high as 20% on all foreign goods, which appeals to the current administration given its simplicity as well as ease of implementation. Now, Peter Navarro, who is a counselor to the president, remarked that the tariffs could raise $600 billion a year, which would exceed all U.S. corporate tax revenue and would equate roughly to 20% tariffs across the board, which is why a flat tariff is back on the table. Now, we'll get some interesting reports this week to see how the economy is reacting to these potential changes in trade policy. We know that sentiment indicators have significantly deteriorated, but we'll get some data points on what's been happening in the real economy. First, we get ISM manufacturing for March on Tuesday, which is expected to soften slightly from last month, as well as job openings, which are expected to remain flat. Jobless claims on Thursday are expected to creep up a bit, and Friday's non-farm payrolls are expected to show slightly lower job gains with unemployment unchanged. So in general, analysts expect data to show that the economy remains strong overall, but is starting to display some subtle signs of weakening. And that's this week's Prudent Pulse.